Okay, so people, good afternoon from my end here. My name is Paul Femi Samuel, and today I'm going to be taking you through a revision on the last topic we actually looked at, which is candles. The type of candles, and then I'll be teaching you what is called pips today. I'll be telling you what pips is today. All right, so let me just quickly type my topic here. We'll be looking at number one. We'll be looking at let me type it. Number one, we'll be looking at candles. We'll be looking at candles. We'll be doing a revision on that. And then number two, we'll be looking at pips. Pips, P-I-P-S, which is an acronym for points in percentage. Points in percentage. So we're sorry the last video wasn't complete, but this video is actually complete. So let me correct the spelling of my candles. All right, beautiful. So that is what we'll be considering today. These two important things. All right, let me make this a little bit longer. All right, beautiful. So let me move this here. So today we'll be looking at candles and then pips, which is point in percentage. Now, quickly, let me walk you through. The last video I did, I actually walk you through this platform. This is what we call the TradingView platform. It's a website where we get direct feed on what is happening in the currency market in the world. A website where we get direct feed, that is direct information. It gives us information on which currency is gaining value and which currency is losing value, which currency is gaining strength and which currency is losing strength. Now, at the top here, at the top button here, at the top corner here, this is where you have the space where you can choose any currency of your choice. The space where you can choose any currency of your choice. At that point, you have where you can choose. Sorry about that call. Okay, so as I was saying, all right. So as I was saying before I was interrupted, we'll be looking at candles. And after looking at candles, we'll be looking at percentage in points in percentage, which is what is generally called pips. And I'll just be doing a brief explanation on what it is. Now, I was saying this point here, this place here is where you have the chart or the space where you could load any currency of your choice, any currency you want to look at, any currency you want to search, any currency you want to see the behavior of that currency. You must understand, it has been said in the trainings that all forex currencies come in pair. All forex currencies come in pair. No currency comes alone. Like this is EUR. This EUR stands for Euro. This GBP stands for Great Britain Pound. So you are always trading currencies in pair. You can never trade a currency on their own. So if I want to buy EUR, what will make me want to buy? If I want to buy EUR, what I'm believing is that from my analysis, I'm seeing that EUR will gain strength. That is, EUR will leave a point A and go up. That is what makes you buy in the forex market. When you believe a particular currency, let me use this my arrow, a particular currency will leave a point here and move up. That is what makes you buy a currency in the forex market. Let me make this thing red. Let me make it red. All right. So this is point A. This point here is point A, and this is point B. Let me drop. Let me see something. I'm coming, please. Icons. All right. So let me drop this as let me use this. Let me use this horn. All right. So this is point A. This is point A. And then and this is point B. So when you believe a currency is going to leave point A and go up, let me say you want to buy Euro GBP. What you're saying is, I believe Euro is going to leave point A and head for point B. So if your analysis is correct and Euro leaves here and heads for this point, the more it goes up, the more profit you make. That is what makes you to buy Euro GBP. And if you're selling Euro GBP, you're saying reverse is going to be the case. It's going to leave this place and it's going to come down. You can see how it came down here. It came from up here. It didn't just drop. It kept on going, moving like this. It kept on moving up and down, up and down. It got this low. So that is how it works in the Forex market. That is how it works in the Forex market. When you are buying a currency, you are not just buying one currency. You are buying Euro against GBP. What it means is, if I'm buying, it means I am buying Euro, I am giving away GBP. You don't need to have GBP to be able to give away GBP. The market, as far as you have a funded account, your brokers take care of that. In our case, Amana Capital or whatever broker we are going to be using, take care of exchanging that. All we just know is do your analysis and buy. When I'm buying Euro now, I'm believing that Euro is going to leave here and go up. I'll buy Euro and give away GBP. It means the more Euro is going up, I'm making money. If I'm selling Euro GBP, what it means is I am giving away Euro to get GBP. If I'm selling, what I mean is that means the market is going to come down. Euro GBP is going to go down. Just you are going to understand these candles in a matter of moments now. It's going to go down. It's going to go down. The more it keeps going down, the more money I make. When you sell a particular currency, the more that currency goes down, the more money you make. When you buy a currency, the more that currency goes up, the more money you make. So when you are buying, you want it to go up. And when you are selling, you want the market to go down. That is what you do in the Forex market. When you buy a currency, you want that currency to gain value. What you are saying is Euro is going to gain value. It's just like the Naira currently. The Naira is about 420. $1 is 420 Naira. So the Naira is very low in value. So if the Naira gains value, it means the Naira will go up in strength. So instead of being 420 per dollar now, it's going to maybe be 300 or 200 per dollar. That means the Naira is gaining strength. But now, currently, the Naira is falling down. That is why you see the exchange rate between dollar to Naira is just is increasing. Dollar is becoming stronger. Naira is becoming weaker. So whenever you are buying a particular currency, you are saying that currency is going to go up. And whenever you're selling a particular currency, you're saying that currency is going to go down. And the more, if it moves in your direction, the more money you make. But when it goes against you, you are going to lose money. That is where stop loss and take profit comes into play. That is where stop loss and take profit comes into play. So now let us go into the first thing we have today, which is candles. Now, if you can see here, you can see two colors majorly. You can see the green and then you can see the red. Now, the green candle, like I said in the other video, is what we call the bullish candle or the buying candle. Now, the market moves in two major directions. Not that it just moves in two, it moves in two major directions. The market value is either going up or it is going down. It is either going up or it is going down, or it has this sideways kind of movement, up and down, short, short, up and down, short, short, up and down. So the candles are instruments in the market that is used to capture price movement over a stipulated period. Candles are instruments in the market that is used to capture price movement over a stipulated period. So what this candle does is it tells me how Euro GBP behaved at a particular time. Was it going up or it was going down, or it was just in one place? Do you understand? Was it going up or it was going down, or it was just in one place? This candle tells me what it does. Now, here you have your different time frames. That is the particular period I'm talking about. You can have it, you want to see what happened in 1 second, you want to see, but then don't use the seconds. The seconds doesn't make sense. You want to stay with the minutes. You want to see what happens in 1 minute on a particular currency, down to as long as 4 hours, 1 day, 1 week, 1 month. You can even see what happens in a particular currency for the whole month. You want to see what that currency is doing. Let me change it to 1 month. Let you see. So this is 1 month. Let me remove all this line I drew. This is 1 month. Each of these candles represent one month. Each of these candles you are looking at represent 1 month. Like this candle now, it represents August 2017. Look at it. Just look down the line. Look down. You can see this one. This candle is November 2017. This one is December 2017. January 2018. Just like that. Up till now, this candle now is September 2020. So you can see September 2020 is a blue candle. Let me shift this a little bit. You can see September 2020 is a blue candle. It's a blue candle. This is September 2020. Just look down. Look down. You can see it. Down to this point. Can you see that? This is September 2020. So this candle is telling me what happened in the whole of September. I'm trying to remove this line. Remove it. All right. So this candle is telling me what happened in the, it's going to tell me what happened in the whole of this September. This is September 2020. This one here is March 2020. So this is all what happened in the month of March 2020. So this is actually how you use the candles. It tells you what price is doing at a particular period. Come in. Let me shoot this. Move it here. Change this to 5 minutes. Okay, that's disappeared. Leave it. All right. So right now I changed it to 5 minutes. So what it's telling me is each of these candles represent what price did for 5 minutes. Each of these candles represent what price did for 5 minutes. Now let us move into understanding candles. Now you can see there are two major colors, the green and the red. Now if you observe, every time the green shows, it shows an upward movement. Every time the green shows, it shows an upward movement. And every time the red shows, the red always shows a downward movement. Look at this case now. Look at this case. Looking forward, the red always shows a downward movement. And I will explain why that happens. Why the green always shows an upward movement. Now, let's go to the green. The green is what we call a bullish candle. Let me see if I can type it so that we will flow together. The green is what we call a bullish candle. All right. The green is what we call a bullish or buying candle. The green is what we call a bullish. The green is what we call a bullish or buying candle. Anytime you see the green candle, let me put it up here. Anytime you see the green candle, it tells you bullish trend or the market is buying. And if you remember earlier, I said whenever you believe the market is going to buy, that means the market is going to go up. It means the market is going to go up. So the green candle shows you the upward movement of the market. The green candle shows you the upward movement of the market. The green candle shows you the upward movement of the market. So it is what we call the bullish or buying candle. The green candle is what we call the bullish or buying candle. So let me now explain the green candle in details. Now, the green candle actually, now listen carefully. The green candle has what we call, every candle has what we call opening price and closing price. Every candle has what we call opening price and closing price. As we go along, you will understand all this better. The green candle opens at the bottom and closes at the top. If you've read through the material I sent, you will understand this. The green candle opens, or the bullish candle or the buying candle opens at the bottom and closes at the top. This wick that you're seeing, this tiny thing you're seeing in the candle, tells you how far that particular market got to but couldn't sustain that place and it was pushed back. So what it means is this candle actually came down to this low point, and anytime the market is going down, remember, it means it is selling or losing value. But anytime it's going up, it is gaining value or buying. It pushed this low, but then got pushed back up. Same with this point. It got so high, but then got pushed back down. So this is usually the opening price. This point here, let me draw a line there. Let me draw a line there. This point here is where this market open. Is where this market open. So this market open at this price, 91,008. It opened at 0.91008 and closed at this price here. This point here, it closed at 91,302. So you can see how it moved up from 100,1008, 91,008. It moved from 91,008 and went as high as 91,301. So you can see that this was an upward movement. It gained more. That is the bullish candle. And then it closes here. The next candle open from that point to continue up. If it's a bullish candle, it's going to continue buying up. If it's a bullish candle or if it's a buying candle, it's going to continue the upward movement. But if it was not a bullish candle, it would have come down, and you understand what that is. So this is a bullish candle, and this is a 5-minute bullish candle. I can change it to any time frame I want by coming here. I can change it. Mostly what you use as a trader is 1 hour, 15 minutes, 30 minutes, 1 hour, 4 hours, and 1 day. That is what you majorly use. So now, moving on, this is what we call the bearish candle. Let me type it. Okay. Let me edit this. Okay. All right. So we'll call the bearish or selling candle. So these red candles you are seeing, both the small one, the big one, they are what you call the bearish or selling candle. Now, these candles are candles that shows you the downward movement of price, or when price is losing value. Anywhere you see the red candle, it is a candle that tells you that market is losing value, or is dropping down, or is selling. It is either losing value, dropping down, or selling. So the red candle represents downward movement. You can see this green candle. You can see that there are more of green candles here. You can see how it is going up. See this one now. This is where the market currently is. These broken lines you're seeing, because the market, so you can see this candle open around somewhere here, and then you can see how it is going up. It is going up, gaining value, going up, gaining value, going up. That's a bullish candle. But if it were the bearish candle, it will be going down. That is how the bearish candle behaves. So the bearish candle is the opposite of the bullish candle. When the bullish candle is moving up, whenever the bearish candle is forming, the bearish candle is always moving down. Whenever the bearish candle is forming, it's showing you that the market is losing value or going down. For instance, look at this. This bearish candle opened here, this particular one. This is where it's opened. The bearish candle always open at the top and it closes at the bottom. It's closed at the bottom, opens here and closes here. So it's opened at 0.91581 and closed at 0.91477. So it lost value from 581 to 477. It dropped. So okay, you can see now this candle, it's open bearish. That is, it opened as a devaluing. You can see how it is struggling. Okay, you can see the way it's moving down, right? Thank God you are seeing a live application. This is how the market struggles. The price are always pushing up, coming down, pushing up. So this candle tells you who won at the end of that time. At the end of 5 minutes, who won? Did the market gain value or did the market lose value? That is how it is always struggling. Now you can see that it's at one line. Whenever you see a red show, that means it is coming down. Whenever I see green show, it is going up. Now currently it's at one line. Just one thin line. So that is the struggle that happens in the market. So that is that about the bearish and the bullish candle. The bullish candle in summary shows upward movement, or the market is gaining value. You can see now it is printing green. So it is going up. So that means the value is gaining value and going up. It's gaining value and going up. It's gaining value and going up. But if it was the bearish candle or the red candle or the selling candle, it would have been losing value and dropping down. That is what. So who is winning now? The buyers are winning. Those that are buying are winning. So this thing is gaining value. So anybody that is buying now is making money, because what that person analyze the market to do is that the market will keep on going up. So the more the market keeps going up, the more money that person keeps making. But if anybody is selling now, the person is losing, because the market is not selling, the market is buying, the market is going up, it's not coming down. So that is that about the candles. Now let us move to this place, this point here, where we have these numbers. Now these numbers are different rates in the market, different rates, different price levels in the market. And the movement from one price level to another is what we call peak movement. Peak movement, the movement of price. Now let me show you. You see how this wick is forming? You see how this thin line is forming? What that thin line tells you is that this thing actually pushed up to this level, but couldn't remain there. It's the sellers, those that want the market to go down, made it, pushed it down, then the thing is now going down. You can see how it is struggling. So anytime you see a long wick like this, it means, like in this case now, I showed you that this thing sell to this point, but then buyers came and push it back up. That is why it closed, the market closed here. I just needed to emphasize that. Now, so in this case, let us use this point. This is what we call the price levels in the market. And what is PEEP? PEEP is the movement of price. The measurement of that movement of price is what we call PEEPs. Just like I said in one of the explanations, I said when you want to measure distance, you measure distance in kilometers or meters. Why the market price is measured in PEEPs, points in percentage. And how do you calculate it? Now, you can see that this is 0.91200. There is 5 digits. 1, 2, 3, 4, 5. There's 5 digits after this decimal point here. 5 digits after the decimal point. Now, you want to always ignore the last digits. This last digit, this last zero, you want to ignore it. You don't need it. You are not using the last digits. What you are interested in is the, let me quickly type it. What you are mostly interested in, let me say 0.9124. You're always interested in just this the fourth digit. The fourth digit is what you call your PEEP. The first digit is what you call your PEEP. The last digit is inconsequential. So if you want to do any calculation, you always calculate from the fourth digit. From the fourth digit after the decimal. The fourth digit after the decimal. Now, if I want to say price moved up, now let's do the maths. Let's do mathematics. Let's do mathematics now. You can see how this thing is coming down. It pushed up, but then it's now rejecting, coming down. That's by the way. Now, if I want to say, I want to calculate how far price has moved from this point. Let me change this one to a red line, or let me use this to up. Let me change this to red. All right, beautiful. So let me put my arrow. Let me show you what we'll be doing. We want to calculate the PEEP movement from here to here. From this point to this point, we want to calculate it. We want to know how much, because I told you whenever it is moving up, that means it is buying, it is gaining value. So we want to know how much movement, how many pips did it go from here to this point? How many pips did it go from here to this point? Now, how do we do that? How can you know how much movement the price move from here to here? This is point A. This lower point here is point A, and this lower point here is point B. So if this is point A, it's just like saying you want to know the distance between, how many numbers is between 10 and 20, or 10 and 17. What will you add to 10 to get 17? All you do is you say 17 minus 10 it will give you the addition, which is 7. That is what you want to do here also. If you want to know the peak movement from this lower point to this upper point, you want to say this upper value minus this lower value. So it's going to be, I told you, always ignore this last value, this last one. You want to always ignore it. It is mostly inconsequential. You want to know how many pip price move from up. And I told you the pip is the 4th digit. The pip is the 4th digit from the decimal. This is the decimal 1, 2, 3, 4. The pip is the 4th digit. So in this case, the pip is the 8. The pip is the 8, while in this case, the pip is the 7. So I want to say 0.9158 minus 0.9147. I'm ignoring these last numbers. So 8 minus 7 is 1. 5 minus 4 is 1. 1 minus 1 is 0. So what it means is, if you do this math, 0.9158, you can punch it in your phone, minus 0.9147 is going to give you 11. 11 is going to give you 11. All this one we cancel out. It's going to give you 11. So what it is telling me is that the movement from this point to this point is how many pips? 11 pips. How did I get that? If you add 11 to 0.9147, it's going to give you 0.9158. Always ignore this last number. Remember, ignore this last number. If you want to do the calculation, don't add this last one and just add this last 7. Always ignore the 5th digit. If you are calculating pips, always ignore the 5th digit. Always ignore the 5th digit. So the difference between this price level and this price levels is 11 pips. So the market actually moves 11 pips. Your pip calculation starts from the 4th digit. Your pip calculation starts from the 4th digit. So if we want to say from, let me change this line to red. Let me change this line to red. All right. So let's say we want to calculate from, here to here. We want to calculate the pip movement from here to here. I want to also calculate the pip movement from here to here. From this, excuse me, please. From this price level to this price level, and from this price level to this price level. Now, remember how, let me change this one to, let me change it to yellow. No, let me change it to this. So we want to calculate from this red to this blue, then from the red to the green. You know, we already calculate from the blue. We already did a calculation from here to here. We already did the pip calculation, and we find out that it is 11 pips when you subtract 0.9147 from 0.9158. Always ignore the last 5th digit. You are not using it. So this, from this blue to this green is 11 pips. So if the market went up, that is 11 pip movement upward. And if the market came down, it is 11 pips movement. So the difference between here and here is 11 pips. Let us do from here to here. Now, this price is 0.9130. Ignore the last one. Ignore the last one. 0.9130, and this is 0.9147. Ignore the last 7. Is the 5th digit. You are not using it. So what is the difference here? The difference is 17. If you say 0.9147 minus 0.9130, it's going to give you 17. So the distance between here and here in the market is what we call 17 pips. So from this red line to this blue line is 17 pips. Look at it here. Look at the value here. Look at it. 0.9147 minus 0.9130. The upper one minus the lower one is what gives you the pips. If you want to know the pips, the upper one, if you want to say calculate the pips, if you want to know the pips, the upper one minus the lower one is what gives you the pip. So I'm going to be giving an assignment after this class for you to calculate the pips, and you send it to me you send me the pip difference. I'm going to give you 3 assignments, the pip difference A, B, and C. A, B, and C. You are going to do that and submit to me. You are going to submit it on the group. How many people does the assignment is what God tells me who is following in the class. Now, so we've done here to here is 11 pips, here to here 17 pips. Now, let us do from here to here. Now, it is easy for you to know if from here to here is 17 and from here to here is 11. You can just say 11 plus 17, which is what? 28 pips. Or you can also say, let us just calculate from here to here. This point is 0.9130. This is 0.9158. 0.9158 minus 0.9130. What number is that? That's 28. So from this point here to this point is 28 pips. 28 pips. 28 pips. 28 pips. So that is how we calculate pips in the market from whatever distance you want to calculate it. So now let me give you your assignment. Now let me give you your assignment. Let me move this. This is going to be your assignment. This is going to be your assignment. Okay, beautiful. Beautiful. And then so at this point. Okay. Let's move this. Let's delete this. Let's delete this. Okay. So what is your assignment? Let me make it tick so you wouldn't say you didn't see the numbers very well. Let me make it tick. Beautiful. Let me make this very thick also. Good. And let me make this last one down here thick also. This is a good. All right. So what is your assignment? Your assignment is calculate the pips. Assignment number 1. Assignment number 2. And assignment number 3. Assignment number 1. This is number 1. Let me put it there. Come in. Okay. This is assignment. Let me look for what I can use. What can I use? There's nothing like 1 here. Let me just use this. This is assignment number 1. This is assignment number 1. Assignment number 1 is in yellow color. What is the distance from here to here? Calculate the pips distance from here to here. Assignment number 2. Let me change the color. Green color. Calculate the pip distance from this green line to this point. Now you can always see the value. The green value is 0.9084. I always told you ignore the last number. So you are going to calculate the pips from here to here. What is the pip value? This is what, ignore this one here. This is what you want to pay attention to. Let me even change it let me change it so that you will not be confused. Let me change it to purple. Good, good. From the green to the purple. This is the values here. These are the values here. From the green value to the purple value, calculate the pips. Calculate the pips from the green to the red. Assignment number 2, from the green to the red. Let me make this one. No, let me not make it red. Let me make it this blue. And then assignment number 3 is this one here. This is assignment number 3. Let me make it green. Good. So this is assignment number 1, the distance from the green, the pips value from the green to the purple. Assignment number 2, the pip distance from the green to the yellow line, to the red line. And assignment number 3, the pip distance from the purple line, from the red line to the purple line. So you want to note them from here to here, from here to here, and from here to here. So you are going to tag this one. 1, you are going to give me the pips value. What is the pip value for 1? What is the pip value? So if your answer 1, answer is 1, you just write 1, comma close, 50 pips. 2, 30 pips. 3, 20 pips. Whatever your calculation is. And anybody that gets it, no prize yet. When we want to start doing prizes, when you want to start funding your account, we're going to be doing a giveaway when you want to start funding your account. So get this done. Reply, this is number 1. The yellow is number 1. the blue is number 2, the blue mark is number 2, and the green is number 3. So answer for number 1, so and so pips, answer for number 2, so and so pips, and answer for number 3, so and so pips. So thank you for watching. Watch this video over and over again, and we will discuss it in class. Have a wonderful evening.